Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 14th, 2022. Holy cow, are we getting some volatility, and we're getting a rally in equities, and risk appetite is abound. But will it last? And that's a good question, and that's something that we're going to be looking at here in just a few minutes. But before I get started, I want to say, if you like these videos, if you like every week ahead video every single week, do us a favor, give us a thumbs up, give the team a thumbs up, subscribe to the channel so you don't miss any of these videos, and also share it on social media. If you saw us on Twitter or LinkedIn or Facebook, share it. I'd appreciate it. I know the team appreciates it. So thank you so much. With that, let's go ahead and get started. So let's actually go through. Well, let's start off with what happened last week, and let's really start with equities because that's where it all really stems from, right? Let's start with the S&P. So I want to say that the S&P has continued to rally, and I thought we'd stall somewhere around the 4,200 level, but we have continued higher, and we are now nearing that 200-day moving average. It was interesting if you listen a couple of weeks or a few weeks ago, when the S&P was down around 3,800. I was pretty excited about the stock market and being bullish, thinking that we could eventually make it up to the 200-day moving average. It's come up a lot quicker than I thought, and as a result, we have to start thinking, okay, we're heading into the end of summer, and it's we're probably going to have pretty low volatility. People are away from the markets. Who wants to step in front of the markets? But we are getting towards the 200-day moving average, and then also towards what I would consider channel resistance. Now, we do still have this long-term head and shoulder pattern. It hasn't been nullified. So the pattern's actually still in play, believe it or not, while you're above the 4,600 level. You just don't want to take out that shoulder. But what I would say is, coming into next week, I would be very careful with risk. One of the things that we have to think about from a calendar standpoint is, yes, we are in the middle of August, but coming into September, the Fed is moving forward with quantitative tightening and picking up the pace with that. So there is going to be liquidity being put or pulled out of the market, if you will. So just think about that as we get towards these levels. Now, let's talk about technically in the S&P. We're getting towards that 618 retracement. Also, you'll see it here around the 4372 level, and that is going to be what I consider very critical resistance for the bulls. Or let's take that back and let's rephrase it a different way. That's going to be really important resistance for the bears to hold. So that 200-day moving average, that 618. Then let's also do one last thing. I'm going to take a Fibonacci extension tool. I'm going to take from the high to the low, that last leg lower. You'll notice the 127% extension comes in around 4330. So if I can give you a number, you might want to write this down. 4330 to 4700. That's going to be, well, let's see, that's actually, it's 4,300, 4330 to 4375. That is going to be your resistance zone and confluence zone that you really need to be very careful with stocks. Now, it's not just the S&P that's rallying. Let's take a look at the NASDAQ. The NASDAQ broke its 38% retracement. It also broke this. This is not a great channel. So just, I've had it drawn as a channel, but we only have a couple points of us really testing it. Depends on how you want to draw it, but I think it's a channel, but maybe it isn't a channel. Regardless, it's broken above the 38% retracement. The 200-day moving average comes in probably about where the 50% retracement is going to be at, coming in around 13,899, so 13,009. That's where the NASDAQ probably is going to start seeing some pretty big resistance. Let's take a look at the Dow. The Dow also is approaching the 200-day moving average and also a descending trend line. Now, also the IWM, you have to look at the Russell 2000. I'm not going to pull it up right now, but the IWM also tested its 200-day moving average at the end of the week. So you can see stocks are reverting back to the mean, and they're almost back to the quote-unquote mean. So think about that, because how you attack the markets might not actually be in equities, but it actually might be in currencies. So let's take a look at the currency market. And before I do this, let me go ahead and mention that if you guys, let me take you over to our sponsor of our week ahead video. It's the Trader Funding Program. One of the cool things about the Trading Funding Program is that you can trade currencies, you can trade CFDs. That means you can trade equities. You can actually trade, CFDs are instruments that mimic equities, individual stocks as well, CFDs on individual stocks, and cryptocurrencies and commodities. You can trade a whole basket of asset classes, and that's why, if you join the Trader Funding Program, you learn how to trade our money and not your own money. You don't want to risk your own money, and you want to keep 75% of the returns, and we keep 25%. But your cut is 75%, and you don't take any risk. So let me say that again. You take 75%, we keep 25%, and you don't take any of the risk. If you want to learn more about this and you want to learn how to take an assessment to see if you can qualify for a larger trading account, check it out. There's a 2-minute video at the very bottom of the Trader Funding Program page. You can find that in the link to the description of this video. I want to say congratulations. I know I said it on Friday if you're listening to the free F.A.C.E show, but I mentioned it on Friday. Congratulations to Dave. David actually qualified for one of the largest accounts that we offer. So welcome to the family, Dave. Excited to have you. And I know he actually recognized me saying that on Friday on our free F.A.C.E show. So let's get back into the markets. All right. So like I said, the way you express how you're going to trade equities, it might actually be through currencies. So let's take a look at the markets, the currency market really quick. And I want to take a look at the euro. Now, if you remember last week's week ahead video, I was keen on selling the euro at the 103.50 level. Well, I did it. I am short the euro near the 103.50 level because that was the previous support from 2016, right here, the end of 2016. Also the lows from earlier this year. And as we had that wedge, we broke down. We just have recovered to the 618 retracement. And also, you'll notice right here, let me go ahead and draw this out for you. So that was last week's drawings. Let's do it over here. You take this low to this high, and you'll notice that we came within spitting distance of the 161% extension of that previous range, or you can say it's the 161% extension of that last, or 127% extension, of that last move lower. So the euro ran into a lot of resistance. The reason why this is important is because if stocks start to weaken next week, as we head into the middle of August, as the market starts anticipating quantitative tightening happening more aggressively in the market, if that's the case, the dollar may start to strengthen. Now, you could express that in the euro, but there's other currencies you can express that in too. Let's take a look at the sterling. The sterling, or the cable, better known as, it rallied back to challenge the underside of this trend line of its previous channel. You can see how it did it just a little overshoot, but that also created a lower high. If you create a lower high and you're not making higher highs, that means either a sideways range is in play or a new downtrend. Something to think about, especially if you're looking for dollar strength. There's another currency that's actually on my radar this week. That's going to be the Aussie dollar. Notice how the Aussie has made a substantial rally. Now, you guys know I'm very bullish the Aussie dollar. If you've been listening here for the last few months, I've been buying the Aussie while it was down below 68 cents. And but the thing is I haven't been long the Aussie the last week. So am I getting a little bit of FOMO right now? The answer to that question is no, I'm not. And the reason why is because I know the Aussie dollar is approaching some major resistance. Take a look at the 200-day moving average and notice how the Aussie reacted the last time we were at the 200-day moving average. Well, there's a 78% Fibonacci retracement that comes in right around the 71.50 level. 200, that's 7150, 55. Actually, it's 7160. It's 7155 on a different feed that I use, but that's okay. You can see just right around that 7150, 7160. Can you imagine just a little bit of an overshoot, getting some people, very bullish the Aussie just when it's about ready to turn? It's possible, but it's not the Aussie that has data this week. It's actually the New Zealand or the RBNZ. The RBNZ actually has their meeting on Wednesday. Let me make sure I got that date correct for you. It is Wednesday morning, Tuesday night if you live, Wednesday morning if you live in New Zealand, Tuesday night if you live in North America, obviously late at night if you live in Europe, you're just sleeping. But the RBNZ is expected to raise rates by 0.5%, 50 basis points. But can we get a dovish hike? Are we getting near our rate hike cycle highs where the RBNZ starts to say, you know what? We might not be so aggressive moving forward. And if that happens, well, you got to start looking at the Kiwi and saying, okay, well, where might we find some resistance? And, we are at the 78% retracement, but I would assume that all of this horizontal resistance right through here is going to offer a lot of resistance for the RBNZ as we continue to move higher in the market. So keep an eye on that going into Wednesday morning in New Zealand, Tuesday night if you live in the US or in North America. All right, now there's a few other things that are happening, and I want to take a look at precious metals. But before I do that, let me mention, if you guys haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days to jump in. Probably the most active trading community out there. It's a very active trading community. You can see these are our chat rooms. Here, let me just take them over to you. You can see what our chat rooms look like. And you can see just kind of all the activity that we just go through throughout the course of the day. Even on an old Friday, most people aren't there on the weekends. But we have a general chat room. We have a trades room where we place, what trades we're in. It's not just myself. It's, other people in the community. We talk about what we have open positions on, what we're trading. We have a Spanish chat room, a news and research room, a macroeconomics room, which is called the Flowonomics room. So really one of the most active trading communities. So if you want to learn how to do that or be part of it, try out Forex Analytics. It's only $1 for 10 days. And guess what? Inflation may be affecting you, but it hasn't affected Forex Analytics prices. Keep that one in mind. Now, I also want to mention, if you're part of the Trader Funding Program, you actually get access to Forex Analytics Premium because we don't want you trading alone. We want you to pass and start trading our money. So we're going to give you all the tools available to you. So anyway, just want to mention all that. Now, what else is happening this week? Well, we have actually a few key data points we need to be thinking about as we head into this next week. So we have Canadian CPI. That'll be on Tuesday morning. So why is that a big deal? Well, the dollar Canadian sitting at the 200-day moving average. If you take this last big move, you can see we're kind of consolidating around the 618 golden fib. So you can see that the dollar Canadian, in my opinion, is consolidating right here, waiting for that CPI data. Because if the CPI comes in hot, well, you might see the dollar Canadian move a little bit lower, and if it's weakening like we're seeing in the U.S., well, then you might see a bounce in the dollar CAD. So I think you need to pay attention to the dollar Canadian going into Tuesday. Now, also on Wednesday, we have the U.S. retail sales data. Now, that's important because you can see the dollar had tried to break down last week, but we're back challenging the underside of this trend line. You can see it's a pretty important trend line. You see that? You can see how important that trend line is because we broke it and then we came back to it and we're testing the underside of it. Now, we do have to pay attention to retail sales. We have to pay attention to all data, but will the consumer continue to be strong in this inflationary environment? Can the U.S. consumer does the U.S. have enough in savings as their pocketbooks were lined with COVID liquidity, if you want to call it that, from fiscal and monetary stimulus. Have they been able to survive this inflation wave that we've seen? As inflation starts to come down, it's going to be interesting to see if the consumer spending can still stay robust. And that's why we're going to be watching retail sales on Wednesday morning. We also, and I know we went through the Australian dollar, we also have employment data out of the Australia, which we'll be paying attention to. And it might be pivotal to this move when we get to that 200-day moving average. And then also at the end of the week, we will have existing home sales, unemployment claims. Oh, excuse me. I'm sorry. It's going to be on Thursday. We'll have existing home sales, unemployment claims. And that's important because, the U.S. housing market has really cooled down in the face of the Fed raising rates aggressively over the last few Fed meetings. So everybody's going to be watching to see if the housing market is maybe bottomed out a little bit. Now, you might think this is it. That's all he's going to talk about, but it's not. I actually want to talk about two more important subjects. I want to talk about gold. Gold's been interesting because we made this really big pivot off these lows, and you guys might have remembered that when we were at those lows. It was actually the chart that I used when we were right here, saying gold's hit some major support. I went aggressively bullish on silver. Gold also, participated. And we used this chart when we were down here for our thumbnail for the YouTube video. So if you were watching the week ahead video, we put this exact chart on the YouTube video saying that we're at key support, and we talked about how it could bounce. Well, we have bounced. Now, the question is, will gold be able to continue? Because I know there's a lot of gold bulls out there. And, I've heard all the arguments. We know all the arguments. You know why gold should be going higher. The problem is gold hasn't been as bullish as I thought it'd be. And if you look at where we're at technically, that 1803, 1804 level, you heard me talk about it all last week with the Forex Analytics team. We all discussed how important that Fibonacci level at 1803 was. It's actually 1804 on this drawing, but it's right around 1800, as you can see. That is an extremely important resistance that capped us all week last week. So if gold continues to break out, that should weaken the dollar. However, based on the charts that I showed you, there's a risk that the dollar starts to bounce. And if that happens, gold may suffer a bit of inverse correlation with the dollar. So as the dollar goes up, gold might come down. And considering the fact that we've really stalled around the 618 retracement, you have to keep that in mind. Last thing I want to show you is boy, I've given you a lot of information thus far. And again, if you like what you're hearing here, make sure you give us a thumbs up. If you're watching us on YouTube, makes me feel better. Team loves it because we're working over the weekend, as we do every weekend, because we have no life, to give you this analysis. Let's talk about crude oil here. And this might tickle you a little bit if you're a consumer and you drive a vehicle and that uses fossil fuels still. All right, I'm going to draw you a little something, what actually might look like a potential move back down towards, well, if we get a little lucky, maybe back down to the low 70s. Now, I'm not necessarily completely bearish on crude oil just yet, but notice how we've really rejected this down descending channel. And as long as we stay below that 200-day moving average, I think there is a risk. There is a risk that the crude oil market could trade down towards the mid-70s. So it would actually be more of a channel support if we made our way back down there. So that's something that I think you should all keep your eye on. It's what we call a Gartley pattern setup. Now, if we did reach down to $75, you have to imagine that is the place where you actually want to be on the long side for those of you that are crude oil bulls. But, I was listening to, I had an interview with Shy Girl the other day, and she's very well known for her analysis on crude oil markets. She thinks crude is going to continue to come down. You know, if that's the case, maybe we can see those mid 70s. And for those of us that want to be on the long side, that might be the place to do it. So guys and gals, I hope you have enjoyed this week's week ahead video. Remember, there's a lot of things happening this next week. I know some of you are enjoying your summer holidays, and if that is the case, I hope you're drinking a pina colada for me. And if you're home trading like I am, be careful, be nimble, stay safe, and I'll see you on the free F.A.C.E show Monday morning. If you want a link on how to get to that show, link is in the description of this video. I'll see you all then. Until then, I'm out. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.